Okay, it's 4:30. I'd like to call the Personnel Committee meeting. Is there any courtesy of the floor? Seeing none, we'll review the executive appointment for Drug Alcohol Advisory Board. It was submitted individual for appointment to Drug and Alcohol Advisory Board, Cindy Curcio, 1034 Reinhardt Drive, Walnutport, PA, 18088. Ms. Curcio is being considered for a 2-year term to begin in July 1st, 2025, and end June 30th, 2027. Any questions?
Motion to move forward.
Thank you. Next, we'll review the personnel request for the court administration. First one will be the conference officers.
Hello.
Sally, he wanted to make a presentation, talk to you about the changes we're requesting. We can get it started, or can we wait for him? It's up to you.
I'll wait for Judge Talley.
We're told he's walking over.
Yes. Thank you.
Thank you.
Here he is.
Perfect entrance.
Yep. Judge.
Hi, how's everyone? Okay, I guess I should begin by, we didn't really expect to be, as far as the timing for our request, we didn't really expect to be here this evening. We were told initially that this information was going to be in the budget booklet, and just by happenstance, our fiscal individual, Mr. Badway, contacted Mr. Barron's replacement just to verify that it was in the budget booklet, and as it turned out, it wasn't. So we were informed then that we should proceed in this fashion. Thus, that's the reason why we're here. So just a little bit about a little history about our request. The majority of the employees included in this request were originally in a collective bargaining unit and termed court professionals. The bargaining unit disbanded at the end of 2019, but these employees remained on the court professionals pay scale beginning in the first pay period of January 2020, excuse me, and continuing to this day. I wasn't aware of this. Had I known, I would have come here sooner than this evening. So what should have occurred was for the affected employees to migrate to the career services pay scale where they belonged, where all other court employees who are not part of a bargaining unit are placed. So in the first instance, our request includes increases requested as a result of placing these employees on the career service pay scale where they should have been placed since January of 2020. So that's the first tranche. Then for competitive reasons, several classes of employees are designated to move up one step in the career service pay scale from GR 22 to GR 23. And these include 11 conference officer 1 positions in domestic relations, 9 juvenile probation officers, officer 1 positions, 12 adult probation officer 1 positions, and 3 DUI probation officers. Also, for competitive reasons, the step for judicial law clerks was increased to step 3C. There are also career service employees that are included in this request. In addition to the current court professional positions that we're requesting to be moved to the career service pay scale, there are 9 current career service positions where we are requesting increases. They are Deputy Director of Domestic Relations, from GR 2902-B to GR 2905-E, Deputy Chief of Juvenile Probation with a proposed increase from GR 2708 28-8H to GR 2807-G. Juvenile Probation Supervisor with a proposed increase from GR 2606-F to GR 2707-G. Deputy Chief of Adult Probation with a proposed increase from GR 2709-I to GR 2808-H. Court Fiscal Administrator with a proposed increase from GR 3007-G to GR 3009-I. Adult Probation Supervisor with a proposed increase from GR 2608-H to GR 2707-G. Executive Secretary Court Administration with a proposed increase from GR 1904D to GR 1907-G. Custody Master with a proposed increase from GR 0402-B to GR 405-E. And Lead Judicial Secretary with a proposed increase from GR 2009-I to GR 2208-H. And the rationale for these increases is wage compression as between level 1 and level 2 employees in domestic relations, juvenile and adult probation, and the supervisory personnel in those departments. No salary increase due to employee being at the top of the step of a current grade. Recognition of expanded duties and responsibilities in comparison to other county employees performing similar duties with similar responsibilities. As far as the budget impact, all proposed increases are funded within our proposed 2026 budget. The total increase of $473,942 is addressed through 2026 mitigation efforts of vacant and retired employee positions with projected savings of $640,000. In addition to the mitigation efforts, historical budget data also indicates that balances that result at the end of any fiscal year, there are adequate funds available to fund these increases. I'll give you an example. 2023, we had a balance of $3.2 million at the end of the budget year, spending 90.04% of the total budget. And I don't have 2024 at my disposal, but 2025 projected we will spend 94.1% of the total budget, leaving a balance of $2.1 million. So that's our request, and I'm certainly available to entertain any questions you may have.
Questions for President Judge Daly? Any questions? Yeah, you're allowed to ask.
So you're saying that these were all, most of them were in a bargaining unit,
Yes.
to disband the bargaining unit? And this happened in 2019? And it's now, I believe, 2026. What happened? Why did we miss so many years to get these people where they belonged?
I've only been president judge for 2.5 years, and it was just brought to my attention. I wasn't aware of the issue. Well, they didn't complain to me. They complained to someone else, but
I mean, it's a $500,000 increase in your salaries, but what does that impact on the benefits? You know, what is the actual increase? Because if you're increasing their salary, you've got increased pension contributions, you have increased, you know, what's their whole package?
Well-
And all of this, what does this come out to, about $1 million?
The benefits are not linked to the salaries, so they're a flat amount per employee.
Right,
So that won't change.
but they're, right, I understand what you're saying. I mean, their
Same thing for the pension as well.
contributions will go up a little bit to their health care because they have a higher earning.
They will
but-
pay more,
yeah,
yes,
they'll
but the
pay more.
county won't.
So you have, all this is in this year's budget? Or are you just projecting?
no. We were told to bring this up, bring this forward today for the balance of this year, which is a month and a half, 6 weeks, and then basically it's next year.
This is reflected in next year's budget in our budget books?
No, that gets back to what I said before. It was supposed to be.
So you want to do this effective, what, next week or today? Or tomorrow, rather, I'm sorry?
The resolution
The
says.
resolution says November 21st.
November 21st. You want to give all these raises November 21st.
Well, it's 6 weeks this year.
Right, right. And that just rolls over next year. And in your budget, you have the money to pay that higher amount of salaries to everybody. Because you're gonna have a 94.1% spend and the rest of it. What happens to that? Does that get sent back to the state like we have to in the military when we don't spend our money?
It just goes back into the general fund.
Our general fund of the
County general
county?
fund. Yeah, the county.
Okay. All right. Thank you.
So none of these positions are tied to AOPC at all, and they're all in our fund? And did you work with Mr. Dunstein to determine that if you do this now, that you would be able to support this next year in your budget?
Correct, yes, we did.
So you two have collaborated on this?
We have, yes.
Okay.
Any other questions?
Got a lot of reading tomorrow, Tom.
Yeah, I know.
I know.
Hear ya.
I don't know, Mr. Warren, you came in late. I don't know whether you've had a chance to review the resolutions, but if you have any questions, I'm happy to answer them.
I'm good. Thank you, Judge.
Motion to move them all forward?
Thank you, President. We're good.
Okay, thank you very much.
Thank you.
Any other business for the Personnel Committee? Accept the motion to adjourn.
Open the Finance Committee. Start with courtesy of the floor. Anybody like to address? Finance Committee courtesy.
Madam President, can you hear me?
Yes, but I'm not in charge of this meeting.
Can anybody hear me?
Yes.
Yes, we can hear you.
Something you wanted to say besides being heard? Ms. Keegan? Okay. Courtesy of the floor.
Hi, everybody. Bruce Haynes, Managing Partner, Historic Hotel Bethlehem. I'm here as a follow-up to the last meeting some of you might have missed. So I don't want to be repetitive, but I wanted to thank you, just briefly thank you for the 2-3 years of funding the marketing initiative for us to drive visitors from around the rest of the country to Bethlehem with our World Heritage designation. And that has worked marvelously. It was a great campaign, driving 1,000 people a day to the website. And so now, and since then, that grant ran out in May, and the hotel has picked up the spending, starting at $6,000 to $10,000 a month, starting in September. And so the biggest need that we really have now is tour guides to greet these new guests that are coming. Basically, the area they're really coming from, the targeted areas, is Virginia and Florida primarily. Those are our two highest paid, although Maryland people were in today from Maryland. So it's really going well. And I asked at the last meeting, if we could see an increase in HBMS, Historic Bethlehem Museums and Sites, budget for tour guides, which was reduced by $10,000 in this current budget from last year. So would like to see that $10,000 restored, and if possible, another $10,000 or $20,000 added to accommodate the increased traffic that's coming. And we want to provide that special experience, and HBMS does a fantastic job of that. They are an incredible partner with the hotel and an incredible partner for all these years, and they're the ones that helped us get UNESCO World Heritage in the first place. So whatever you can do to find some funds to restore the money for the tour guide program. I think there's 3 funding things for them. One's the Smithy blacksmith shop for the demonstrations, but I'm focused primarily here on the tour guide portion. So if we can get another 20 or 30,000, I'd be really delighted, and thank you very much for your past support of our marketing initiatives. And now it's working, and we need to take care of them. Thank you.
Anybody else for courtesy of the floor? If not, we'll move forward. Review of the
No. That's a separate animal.
Okay.
Think that they get.
Is anybody from the courts to address this?
No, they left. They got what they wanted, they, well, but this is set by AOPC
I'll just read the
also.
cover memo into the record. This is to all systems and related personnel, AOPC Finance, calendar year 2026. Court cost increase effective January 1, 2026, dated October 17th. Act 54 of 2024 extends the requirement for annual court cost increases first provided for by Act 167 of 1992, and more recently, Act 96 of 2010. The annual increases are based upon the increases in the Consumer Price Index. The applicable increase for this period is 2.8%. Enclosed are the regulations setting forth the cost to be charged pursuant to the Act, along with the amounts payable to the Commonwealth during the calendar year 2026. Also enclosed is a payment distribution table allocating the calendar year 2026 court costs between the state and the county. The state's allocated share consists of costs established under prior law and the additional costs established by Act 167 in 1992, both adjusted by the annual inflators. The increased costs apply to all citations and cases filed on or after January 1. In addition to adjusting the costs in keeping with the percentage increases in the Consumer Price Index, the regulation amounts have been rounded to the next 50 cents for purposes of accounting and operational efficiency. See Supreme Court Order Number 644, Judicial Administrative Docket, authorizing the Court Administrator of Pennsylvania to promulgate regulations to implement the cost schedule pursuant to Act 54 of 2024. If you have any questions of Alfred, the Administrative Officer of Pennsylvania Courts. I will not read the copious enclosures and attachments with that. Any questions or comments from the public on that, or from council?
My comment is that it's $57 to get married, and it's a whole lot more to not be.
We will not make any further comments on that, right? And without any other comments on that, we'll move, make a motion to move that forward to. Next, we have the review of the Controller's report. Madam Controller.
Thank you. Just want to briefly start and say thank you to everybody who reached out to me about after the election, congratulating me, and particularly John Brown. I had a very nice conversation with you, and I really appreciated that. Thank you. So now we'll get to the report. Controller's report for the Northampton County Finance Committee meeting. Our first audit was the performance audit of the Tax Claim Agency or Custodial Fund as of September 30th, 2024. Act 542, the Pennsylvania Real Estate Tax Sale Law, passed in 1947, centralizes the collection and management of delinquent real estate taxes by consolidating them under county governments for efficiency and to simplify the process for officials, property owners, purchasers, and title searchers. Counties collect delinquent taxes on behalf of local municipalities and school districts and remit collected amounts back to them monthly. Properties with taxes delinquent for 2 years are scheduled for public auction, first through an upset sale and, if necessary, a judicial sale. To manage these funds, the Revenue Division maintains a tax claim custodial fund, which acts as a separate accounting entity to receive, hold, and disperse taxes and sale proceeds. The custodial fund ensures that all monies collected are properly allocated to rightful recipients, such as school districts, municipalities, and lien holders, with the county retaining only commissions from the authorized sales costs. The purpose and scope of the audit. The purpose was to determine the adequacy of internal controls and compliance with policies and procedures, laws, and regulations. The audit covered receipts and disbursements from January 1 to September 30th, 2024, and did not include a software review, but did review the accuracy of taxes entered and interface to the IAS World and One Solution programs. The audit was conducted using judgmental sampling and in accordance with government auditing standards. Our observations were as follows. Internal controls and compliance are mostly adequate for the tax claim custodial fund, which manages the delinquent taxes for municipalities and school districts. Our two main concerns noted were first, the premature disbursement. Funds from the 2023 upset sale were distributed before receiving a court order, which does not comply with Section 205E of the real estate tax sale law. This was a repeated issue from a previous audit, and the management now states that no distributions will occur without court confirmation in the future. Undisbursed surplus funds, some dating back to 2022, had not been distributed to tax districts due to a turnover in management. Management now confirms these funds will be dispersed once the required holding period is reached, as a court order is not necessary. In summary, the audit of the tax claim custodial fund found the internal controls are genuinely adequate and most procedures comply with the real estate tax sale law. However, two significant issues were identified. First, taxes recovered through the 2023 upset sale were distributed to local entities before required court order, as I stated. And second, the surplus funds eligible for disbursement to tax districts were not properly distributed. Though management has committed to resolving these delays going forward. The recommendations are: do not disburse upset or judicial sale proceeds prior to court order confirmation. Ensure timely disbursement of surplus funds according to statutory requirements. Update policies and train staff on correct surplus disbursement procedures. And the management response from Anthony Morris, who's the revenue manager, was first, Revenue Division leadership has committed to cease disbursements before court confirmation for future sales, and surplus funds will be distributed to taxing districts after the statutory 3-year holding period with no court order required for the distributions. This audit was conducted by Mark Diliberto, Auditor 1, and signed by myself. Next, we have the agreed-upon procedure, jail community corrections 2025. The audit of the community corrections program's work release functions in Northampton County for January 1 to May 31st, 2025, found a number of procedural compliance issues, particularly related to the handling of receipts, deposits, and deductions. While checks and receipts were mostly handled accurately, there were several areas noted for improvement in deposit timelines, documentation, and reconciliation procedures. Our key findings are as follows. For receipts and deposits, most receipts and amounts were accurately entered and matched with deposit records. However, receipt numbers were sometimes non-sequential, though all missing receipts were accounted for subsequently. 21 of 30 receipts were not deposited on the day received, with some deposits delayed up to 13 days and not routinely reviewed by staff after deposit. Additionally, many deposits lacked validated deposit slips. For checks issues, all check sampling were prepared correctly, but 2 of 15 deductions did not match corresponding deposits due to improper entries in the Offender Management System, or OMS. Not all checks had documented supervisory reconciliation before signing, though check amounts matched financial reports. 2 inmates were undercharged $44 and another overcharged $12. In deductions, charges for inmates were mostly calculated correctly, but occasional undercharging and overcharging was found. Some due to manual processes necessitated by OMS limitations, but discrepancies were corrected during the audit. 4 inmates were undercharged a total of $280, and 3 inmates overcharged $2,030. 3 undercharged and 3 overcharged inmates were corrected during the audit, and the rest or the subsequent corrections could not be made because the inmates were still in prison. Documentation. A minority of checks and deposits were not properly documented or reviewed by supervisors, highlighting a need for improved oversight. One was incorrectly entered into OMS, and it caused the difference of $204 in one deduction and $188 in the other. The audit was conducted using agreed-upon procedures in accordance with generally accepted auditing standards and did not issue a formal opinion or conclusion beyond these findings. The audit was conducted by Amna Essen, who is a lead auditor, and signed by myself. Next, we're moving on to hotel room rental tax for the Tuscarora Inn, number 141. So this is for January 1st, 2023 to December 31st, 2024. And this found that the operator consistently complied with regulations and submitted accurate, timely tax remittance forms. No underpayments or exemptions were identified, and all review and tax calculations were confirmed to be correct throughout the audit process. Our key findings: all hotel tax remittance forms used the correct version, were complete, and accurately calculated monthly taxes. All remittance reports were submitted or postmarked by the deadline, the 20th of each month. The operator remitted the higher of the tax collected or the tax due for each reporting period. Financial statement inspection showed correct recording and reporting of room revenue and taxes. No exemptions were claimed during the 24-month period. The engagement did not identify any compliance issues or material misstatements and was performed under generally accepted government auditing standards using agreed-upon procedures. No formal opinion or conclusion about overall hotel tax remittance operations were provided beyond the verified findings. This audit was conducted by Jeffrey Talapan, who is an Auditor 1, and was signed by myself. The next hotel is the audit for the hotel room remittal or rental tax remittance for license 106, the Lafayette Inn, covered January 1st, 2023 to December 31st, 2024. It found significant compliance issues following the sale of the property to Lafayette College. The previous owner, Mr. Andrews, Operator 1, submitted all required forms, calculated taxes accurately, and remitted the proper amounts for the period owned. However, Lafayette College Operator 2 did not file or remit taxes for the 16 months after acquisition, resulting in an assessed liability of $28,175.84. Our key findings: the audit reviewed remittance forms and financial records for both owners, Operator 1 for 8 months and Operator 2 for 16 months. Operator 1 accurately completed forms, computed taxes, and made timely payments each month. No additional tax was owed. Operator 2 did not submit any required hotel tax remittance forms or payments, leading to confusion over departmental filing responsibilities. Operator 2 claimed one exemption, but it was invalid due to the lack of tax-exempt certification. A total of $28,175.84 in unpaid hotel room rental taxes plus penalties is owed by Operator 2. No additional taxes or refunds were due for Operator 1. The audit was conducted under generally accepted government auditing standards and did not provide an opinion beyond the specific agreed-upon procedures and findings. This audit was conducted by Florina Tang, Auditor 1, and signed by myself. The next is the audit of hotel room rental tax remittance for license 164, the Townley House. This was from January 1st, 2023 to December 31st, 2024, and it revealed a mix of compliance and procedural issues regarding remittance and documentation. The operator used the correct tax forms, but there were significant delays and some reporting inconsistencies. Our key findings are as follows. The operator submitted accurate, complete forms for 12 out of 24 months. For the other 12 months, the actual tax collected was not reported, making it impossible to determine if the higher of tax collected versus taxes due was paid. Tax collections were accurate for all reported periods. Remittance reports were late for 13 out of 24 months, leading to the late fees assessed 10 times. Financial reviews found 3 months of overstated and 7 months of understated taxable revenue compared to the hotel's records for 9 months. Tax paid exceeded what was owed. No tax exemptions were claimed during the audit period, and the audit determined the hotel overpaid its tax to the county by $50.01. The audit was performed under generally accepted government auditing standards and was limited to the agreed-upon procedures. No formal audit opinion was expressed. This was conducted by Jeffrey Talapan, Auditor 1, and signed by myself. Finally, the audit of the hotel room rental tax remittance for license 171 Fairfield Inn and Suites in Bethlehem, covering September 1st, 2024 and to September 31st, 2024, identified several compliance strengths and notable weaknesses in documentation and reporting. The audit evaluated 4 months of activity due to the hotel's recent opening. Key findings: the hotel used the correct forms, which were completed accurately for all 4 months and correctly calculated the tax owed. 2 of the 4 monthly remittance reports were submitted late. 1 late fee was assessed. The hotel consistently remitted the greater of tax collected or tax due each month. Exemptions were claimed in November 2024 by appropriate exemption forms were not attached to the submission. Financial review showed taxable revenue was understated compared to hotel records. Of 8 exemptions tested, all were valid, but 2 exemptions were not, including 1 exemption included on exemption forms provided to the county. The audit concluded the hotel owes Northampton County $1,311.09 in unpaid hotel room rental tax. The audit was performed, again, under generally accepted auditing standards and was limited to the agreed-upon procedures. No formal audit opinion was expressed. This was performed by Jeffrey Talapan, Auditor 1, and signed by myself. Are there any questions?
Operator 2 of the Lafayette Inn understand now how to go forward and submit timely payments?
Yes. They will be audited again.
Thank you, Tara.
You're welcome. I just want to say that it was Florina Tang who found all those, all that money. And I think that the work that the audit staff does is really important for the county, and I'm very proud of my office. Thank you.
Next, we have review of amendments to the Northampton County Governmental Accounting Standards Board Statement Number 54, Fund Balance Policy Ordinance, and this draft was introduced by myself and Mr. Kapora at the November 6, 2025 meeting. Jeff, do you want to take this, or you want me to go through it? In short, if you read through, the changes that are being recommended are on page 6, under the bullet point 2, a financial stabilization fund. The suggested balance of the financial stabilization fund is recommended to be maintained at a minimum of strikeout. Currently, it's 5%. The ordinance is recommending a 10% of current year budgeted general fund expenditures, including transfers out. The financial stabilization fund is not to exceed 15% of current year budget general fund expenditures. And then page 10, where the effective date, we're striking out it will take effect 30 days after the date of enactment of ordinance. This ordinance the change is the ordinance shall take effect as of January 1, 2027. Just out of curiosity, January 1, 27 for what purpose?
Because if you put it in 26, we'd be out of balance immediately. So it gives the county time to catch up. Hopefully. Optimistically.
Okay, so those are the two. You can read the entire ordinance, but those are the effective changes that were listed in this. So questions, comments, discussion from council members?
I have a question. What is the financial implication of moving it from 5% to 10%? How much more money has to be set in the savings account?
Depends on the budgeted expenditures for the,
Stays the same as it was last year.
last year, the administration withdrew 12 million. That
Well, I'm asking what they
balance is
withdrew.
7 million, so
What, the balance right now is 7 million, and that's 5%, or is that over 5%?
approximately 5%, so assume,
Double that.
assume that would double.
So 14 million. So we have to find $7 more million by the end of 27.
26.
26.
Right, for January 27. So, if she can't find it, we're either looking at cuts or a tax increase then, right? That's what you're proposing?
That'll be for the administration and the fiscal department to determine as part of their overall budget construction. So you can't make that assumption at this point.
Well, I can't, but I can
You can infer that, yes.
relive history. When you were stepping out as county executive, and you tried to take the 5 mil increase away right at the budget time to imbalance the budget for the incoming executive. It seems like the same thing again, cloaked as she has a year to do it. But back then, what do we have? 2 Democrats and 7 Republicans, and they all voted not to do that because they were a little saints. So I'm not going to support this. I mean, I hope that the new county executive is fiscally conservative and wants to save more money in the budget than thing, but I don't want to bind them. And I think this is a GASB standard, the 5%. This is something we're going above and beyond what government accounting asks you to do. So, John, I can't support it. It's like deja vu. It's like the same thing you did 8 years ago when I was here, right before you were out the door. And I don't want to bind the new executive with this. I mean, I would hope that she would do it on her own. I understand where you're going with it. I mean, it's a great idea, but, I mean, we're following government standards. The previous executive, the outgoing one, thinks and thought, ever since I was on in 2011 and before, that we were overtaxing our citizens, that we were taking too much money from them when we had all this money sitting in the coffers. It only came to light because, you know, the state couldn't get their act together and pass a budget, and we were really, really bound up here with who's going to pay. We couldn't pay anybody. And I understand I understand the intent of it. Well, the intent on paper here. I can't speak for your intent, but it just seems like deja vu all over again. And I won't be supporting it, and I will, you know, actually say the same thing tomorrow night if I have to. And I hope that council also does not support this and allows the new executive to come in here and try to figure out what she is going to do and how she's going to increase her what she feels we need to have set aside. So that's all I have to say.
So in fairness to Mr. Brown and Mr. Fora, who put their names on this, I'm the one that initiated this in a conversation way before the date that we're hearing it. It's a conversation I've been having with Mr. Spadoni over a period of months, questioning it, sat on the fence whether I wanted to do it or not. And the rationale is not about who might win the election, but more the idea that we've been listening to as council, the idea that this 5 to 15% is arbitrary, and so that we're going to keep taking it down, and we're going to help the taxpayers. But again, maybe it was a convergence of things that occurred with the federal shutdown and the state, but it's down to the point that there's no wiggle room at this 5%. So I don't think it's fair to the incoming administration to not have some way to make them hold a standard. They could choose to keep it at 5, you could vote it down, but something like this happens again, we're in trouble. We don't have money. We don't have extra money.
I agree with you.
So that's, you know, I don't want anybody else being blamed for what was my thought, and I don't, it's not intended as an out-the-door kind of thing, and he can attest to the fact
Okay.
that we've been having this conversation for a while, and I'm like, can I do it? Could I put it at 7? Should I do? So I just said 10. 10's right in the middle, And that way, even if it's only for a period of time, and if council wants to put it back somewhere else later, they can.
Well, I mean, a new council can rescind this ordinance anytime they want and make it
could.
5% again if the county executive comes up to us and says, but I understand where you're coming from, Lori. I understand that we were in a pickle.
But
and
I
we
just
had no
wanted to be
idea.
really
All right, well,
clear that it's
John,
not,
and it's not
Mr. Kraft, let
outgoing,
Lori,
which I understand.
let Lori
Well-
finish her thought.
you know, I just want everybody to understand, it's not like a gotcha to anybody. It's
Right.
really trying to say, like, I have listened to this 5% and like campaign promises for years, and now here's where we are. And it's not good for a new administration coming in to have absolutely no wiggle room, so.
Right, okay, and I understand where you're coming from, but, you know, I think the only way to get here is for the next administration to do a tax increase. Unless they can cut other things. I mean,
You
everything
could do
that's cut
that
out.
now.
Pardon me?
You could do that now.
Doing a tax increase now. I voted against the tax increase when we did it, when John was on. You know, I don't want to bind, you know, this is gonna cause a lot of hardship in the county, because there's no money. I mean, we didn't put anything in the pension, we didn't put anything in different things. We got Graysdale, you've been saying it all year long, how it's, you know, taking so much money, and now you're gonna add another $7 million that has to be put in a pot and left there, in case the state decides not to do something again. And I understand what you're saying, Lori. I'm agreeing with you that we should have more money, but I think the executive and the administration should figure out a way to do that. And if they can't, by voting for this, they have no wiggle room. They have to do it, unless the new county rescinds it.
I just think it's really unfair to set a new administration up that way, and that, I just do.
Well, I think it's conversely unfair to set them up that they have to have a tax increase in their first year. So that also is the same thing. Let's give them a chance to figure out how they want to run the county and see if they can put more money in there on their own. Maybe it'll be 7% next year. I don't know. You know, we're doing the same thing. We're assuming that she can't and won't increase what she feels she needs to have in the bank.
Ms. Keegan?
I think she's there.
Welcome to the,
Having trouble hearing you, Ms. Keegan.
she can hear, but we can't hear her. Every other word's getting cut off, Kelly. Another problem to solve, I guess. Put it on the list. It's not about you. It's not about you.
Zirinsky, now, at this point, this is for council to discuss.
So she could
thank you.
speak tomorrow night when this comes up.
At
Yeah.
the public session,
Right,
yes,
that
you can
makes sense.
offer comments tomorrow.
Kelly, you need to call in if you can hear us, because we cannot hear you if you need to
Did she
say
chat?
something. You're cutting out. Either that, or take your Apple EarPods out and just use a regular speaker.
All right, well, we're waiting for
Hold on
Ms.
now.
Keegan to.
It happens to you too, don't you know that? Yeah, it was,
Anybody else
You
have
were
any
texting me.
comments on this? Are you done, Ken? Yeah, okay.
could you text her, because she's trying to send her a chat? I don't know if she's looking at her chat. If she wants to
Okay.
text
Hear
her
me.
comments, we could.
Well, I sent it to her in chat, but I'm not sure if she's looking at that.
Look
Can
at
you
your
hear me?
chat, call in.
I am calling in.
There we go. Go ahead, Ms. Keegan.
Can you hear me now?
Yes.
Oh, okay. Sorry, it was a little frustrating right there. So back in February, I distinctly recall the majority of the board not wanting to move forward with the parking garage because we were worried about the new administration. And now it just feels like we're moving out of a house and painting it the most hideous color pink for the new people to have to deal with. This just seems so wrong to try and create a tax increase for the new administration when you guys were all concerned about the new administration having to deal with a new parking deck. I mean, it's kind of hypocritical.
Anything else, Ms. Keegan?
Not at this moment.
Okay, thank you. Mr. Kapoor?
We are building a parking deck. Thank you.
Hi, if no one else, I'll make a couple comments. One, the issue with the financial stabilization, there are two problems with it. One, when the financial stabilization was originally created, there was an ordinance that gave control of that money solely to council. It was not meant to be for balancing the budget. It was not meant to be just a slush fund. It was meant to be for emergencies. I believe it was prompted out of some of the storms that had hit the air, hurricanes and so on and so forth, and the shutdown. It was meant to be able to have monies available in the emergency so we would not have to take the actions that were recommended by this administration, potentially to lay people off and so on and so forth. That was the original scope and the intent. A council, after that, changed and loosened, relaxed that ordinance that gave the administration access to those funds. It was never intended. The situation with the financial stabilization is not meant to increase taxes, but this administration took $11.8 million of that financial stabilization out in order to balance their budget. They needed that money because whatever financial management practices they had followed left them the need to pull that money out. So that's what led us to where we are today. This ordinance, in my opinion, while prompted by Ms. Hefner, I agree with, because that money is meant to be a reserve so we don't have to go through and put out employees and our services, which everyone on this panel has said we needed to provide money for. To have those monies available, we would have had at least $12 million left to be able to take care of that situation, which, because the monies were not there, we couldn't do that. So that's the basis and the background on this. And Mr. Kraft, you are incorrect. In my administration, I did not go to touch the financial stabilization. I did go to repeal back a tax increase. That is correct. Just for clarification of your point.
To clarify what you just said.
Yeah, go ahead, I'm done.
Now, if at council, and I don't remember which council put it down to 5%, said this is what you need to keep in this fund, it's not taking the money out of the fund to balance the budget. That now goes to the general fund, which is part of what the county executive gets to set his next budget on, as you know. So if you can't say, okay, if it's supposed to be at 5% and he put it down to 5%, that isn't taking the money out of the fund. Technically, it has to be at 5%. That's what it's supposed to be. If that's the law right now, we're at 5%.
The law, as
Think
written
5
in the
to
ordinance, is
15%.
5, not to exceed 15%.
5 and
It
not to
doesn't say it
exceed
has to be at
15.
5. It doesn't say you can't exceed 15.
All right,
So
but the
that's
minimum was 5.
That's the parameters that are set by the
And then we put
ordinance.
guardrails on it that we didn't want them to keep more than 15%,
More than
which is
15%,
like,
right, yeah.
$21 million in the bank. All right, well, I mean, if this previous administration decided to take it to what the law says, I mean, that's where we're at. And I understand what you're trying to do by tying their hands, but I really don't want to do that at this point to a new administration, so, thank you.
Thank you. Any other comments on this topic? If not,
Ken, it looks like the council that you presided over was the council that did the last ordinance.
Yeah, and you probably voted for it,
I
too, if I
probably did,
remember
too.
correct, but it's a long time ago. I mean, we're
Well,
talking
I'm just saying, I'm looking at it now.
8 years, it's okay, blame it on me.
I'm not, but you're just saying
Oh, I mean, you
whoever
blame it on
did it.
me.
I just want to clarify, we were there.
We did it.
yeah, and that'll be on the agenda for tomorrow night for introduction, right? Okay, we'll move that forward. Next, we have an update regarding the opioid trust fund. Yeah, it looks like we have a memo from, on that overall. Is there, Sue can't, we can't make it, Sue Wondolowski. Okay, is anybody from the administration going to address this? Ms. Wondolowski can't make it. I don't know if someone else wanted to address this.
Do you have any specific questions? I know that voluminous documentation was provided to you. I think Ms. Jurley, who's the CEA, or the way we refer to her as the Administrator of Drug and Alcohol in Northampton County, has presented to County Council on what we've done in our plans 5 different times. We've provided you, I think tonight, a 35-page compendium of all the testimony that's been given to. Why are you looking at me, Ms. Vargo? I mean, I don't understand.
Choice of words.
What?
Choice of words.
What's that? The compendium?
Yeah.
Oh, is that, you don't like the word compendium? Well, it's what it is, and what it demonstrates is the voluminous amount of information that Drug and Alcohol has given to County Council throughout the entire pendency of the Fake is Real program, which has been wildly successful. We've actually seen our death rates from opioid abuse and fentanyl decrease more than the surrounding counties around us. So the total rate for opioid deaths is down everywhere. Ours are down significantly more than other people, and we think that's a direct result of the very aggressive Fake is Real program that we've had.
She sent a PowerPoint. Is she going to come tomorrow to go?
I don't know. I have to find out.
I mean, we got
But the point here is,
There's money, what I asked for was the breakout of the financials, what we got each wave, and she did include that. So with, you know, all that other stuff is background information and other presentations. What I wanted was the breakout of this and what would have been the district attorney funds, because that was brought up. And so, and I also have come to understand that while money was distributed in wave 1, I'm sorry, I should have asked for permission, but I asked for this information, that I know that there's money that was spent, and that as it comes in waves, but just because it was encumbered in 2022 doesn't mean it doesn't have to get spent out till a certain point in time. That's not listed here. Right now, I can't see it, but I was just looking at some of the breakouts, and I see what the unspent funds are. I also see the district attorney stuff, but I'm not sure, because they're categories, they don't exactly say what they're doing or what they're for. So for example, future funds say adolescents, college student, wave 2022. I don't know what that means. Continuous Rise mobile outreach. Well, we have that somewhere else, so I don't know if it's just a part of it or not. I know that the county newsletter, 21,000 and change was spent, but I know for a fact that that was not approved, and only 4,000 was approved. So I wanted to know where we were now. I know there's more money coming in, and I wanted to know what she was proposing to do, if she's looking to do the same things over and over again, if she's proposing a new program.
well, so nothing new is going to be proposed between now and the change of administrations, and I think one thing, apropos of your entire conversation tonight.
They're being heard now, so that's not true. So you're saying your administration and this last review that we just did, Northampton County is not proposing any new proposals at the end of this year for next year, because that's due now, and we're voting on it
What you
in
mean, what's in
December.
our budget?
No, this has nothing to do with you. This has to do with the opioid task force and what is presented to them, because this goes to them for approval.
Right.
And that's due now, so it has nothing to do with the next administration. I did my review 2 weeks ago, somebody else did theirs, and all new programs were heard. So I don't see what's on here as a new program. All I see
I do not believe they are proposing anything new. Specifically, with the understanding that with a change of administration, there could be a change in focus.
Any other questions or comments on?
I'd have a question about the recovery housing and a breakout of how many people are getting it, where they're using, it would be nice to have some other kinds of data. Like, I know we have some of the programming, and I'm not disputing the programming. I'm not disputing their creativity or their efforts. I mean, I may have some agreements or disagreement with it, but I just think it's a lot of money to just keep plugging it into the same things when I see other counties are really going beyond. And then there was some question about what the recovery centers were told in terms of a decrease in funding, and then there's enough money in here. So I want to make sure that they're all receiving it and at the same level. Or are there plans to increase any? So now it says here future plans to expand, to expand, to expand, to continue. So nothing new.
Correct. Because it's been so wildly successful.
Not at this time.
Thank you, Mr. Meckler. Okay, next we have review of the 2025 budget amendment. Budget amendment 2025 Northampton County. Does anybody from the administration want to address this, Mr. McClure? Good evening. Council, questions on the budget amendment? Comments? Anything you want to highlight for us?
It's all pretty standard. It's your standard human services amendments plus some grants that we've been awarded throughout the year.
So this money is not based on the government being open. This is prior to that. These
Yeah,
are
this was all
numbers.
calculated before everything was passed.
You're assuming that with the passing of the budget, everything will flow to us that you were anticipating from the...
We've already gotten all of our cash. Mhm.
Okay.
A lot of cuts. So will any of this money come back?
A lot of, so when you're looking at human services, a lot of that has,
Specifically, yes.
yeah, it has to do more with the timing of those expenditures between the calendar year and the fiscal year than any actual cuts to our funding.
Any additional questions or comments for? Thank you.
Thank you.
Last on the agenda then, we have review of Administrative Code Article 13, Contract Resolution, Slate Belt Plumbing, Heating, and Electric.
Good evening. This contract is for the maintenance of the county, the lighting along the highway interchanges on 22 and 33 that the county is responsible for. Slate Belt Plumbing and Heating has held this contract for, I believe, at least the last 8 years. What we do is we request unit rate pricing for labor, equipment, and materials that are required to perform these repairs, since obviously the scope of work is going to be different depending on each repair. The pricing we received, this bid is nearly identical to the previous 3-year contract. So we're happy to see that the pricing is remaining consistent.
Questions, comments on the contract? No, if not, we'll move it forward. Thank you.
Thank you.
Okay, anything else at this point that, bring before the committee?
Did you see this?
Go ahead, Lori, if you
Well,
want.
We got these reports from Mar Ducel, and I don't know when or how we want to address them, but I think some of the language of them is a little bit concerning about the way certain things were handled, or, page 17 discusses clearly unbudgeted transfer from the general fund. There's also a question about how the COVID-19 recovery funds were handled, and that, I guess if Mr. Dunstay wants to talk about, it says in here that there were corrections, or that, I'm not using the right word. Let me find they gave suggestions for the reporting or corrective actions. So have we worked with them to do those corrective actions, or where do we stand with those? Page 21 in the book.
I don't have the single audit in front of me to
Sure, and if
know
you
exactly
want,
what it says, but I do know in the case of the ARP reporting, that was all settled and gone back and forth with the federal government. I want to say it was either May or August this year. So we've gone back and forth with them and fixed the reporting in that sense.
and so, since you don't have it, is there a way you could send us what was agreed upon, or what the change was, or what? You don't have to do it now on the fly. I don't need that.
Yeah, I can look into the single audit and see what it is.
Thank you. Since this is the time for that.
And nothing else, then we'll go ahead and adjourn the finance